This is Let's Talk Chattanooga Real Estate, the podcast where we cover home buying, home selling, home improvement tips and ideas, market trends and developments, and investing in real estate. If you own real estate in the Chattanooga, Tennessee area, or want to own real estate here, then you're in the right place. Let's Talk Chattanooga Real Estate is hosted by Blake Watson, a real estate agent and investor in Tennessee and Georgia.
This is the Let's Talk Chattanooga Real Estate podcast. My name is Blake Watson, and I am an agent with Epic Realty. And my friend here is Don Oakes. He is with Highlands Residential Mortgage.
You got that right.
Hey, it's good to have you here today. Today we are talking about the Chattanooga Real Estate Forecast for 2025, and we're going to look back a little bit on the 2024 realities, really the historical events that have occurred. We also have data points going back at least to 2010, which I think will be very helpful. So, Don, let's talk about 2024. You as a mortgage loan officer, what was your world like in 2024?
To put 24 in perspective, you have to go back to 23, because 23 was an unusually bad year for us in the mortgage business and for the real estate business.
Okay.
Also, but just because of the rate increases, because we were around 8%. And so 24 saw those gradually coming down. When is the Fed going to cut rates? Although that doesn't directly affect us on the mortgage side. But when and how are those rates going to come? So, we ended up the year right around 7%, just below 7% is where we ended up on 24. So that tremendously helped us. Nationwide, if you looked at the numbers, and this is not specific to Chattanooga, business was up about 15%. And the mortgage side and also the real estate side. So it was a good year in that respect. Yeah. And so there's a similar number predicted. You didn't ask about 25, but I'm going to give you 25. This is a similar number predicted for 25 because there is still so much pent-up demand out there. Mm-hmm. If you looked at the apartment construction, that has slowed a little bit, but there's still so much pent-up demand, and people are just waiting for that right house to come up or the right rate. So that's kind of an indirect answer to your question about 24. That's
what 24 was like, and now we see a glimpse at 2025 as well. We have so many people they hear that the Fed has cut their rates. And I get calls. I'm sure you get calls. Yeah. And everybody's like, okay, so interest rates are coming down. Well, that is a Fed funds rate, which is not a mortgage rate.
Right.
Could you kind of separate those for us and explain a little bit so that people will understand why, even though the Fed cut the rate by a total of 1% this year? Tell us about that.
The Fed funds is interbank rate, or what are the banks borrowing? What are they paying for their money? And therefore, they're going to reduce their rates as the Fed cuts that rate on credit cards, car loans, things like that. That has nothing directly, as you said, to do with long-term mortgage rates, because we're creating on a Fannie Mae, Freddie Mac, FHA, VA type of loan. We're creating a security. That people's eyes are glazing over right now as I say that. But we're making your loan conform to certain standards because it's a 30-year commitment. Now, average says you're not going to hold on to that mortgage for 30 years, but it's a 30-year commitment that we as a lender are making to you. And so what rate are we going to, what rate does the market have an appetite for to commit for 30 years? And so that is totally different from what the Fed funds rate is. However, when the Fed cuts the rates, it makes the phones ring. So we're okay with that. So if they want to call us, and we can explain how all of that works.
Very good. Well, I appreciate the explanation there. Okay. And the fact that at least we know that there is some effort being made on the Fed side to move the economy along.
Yes.
And that's the point
exactly,
of that, right?
Exactly.
Let's look at some interest rates and sales prices and some other data points that we have going back to 2010. And I want to tell you where we sourced this information. As a member of the Greater Chattanooga Realtors, I am able to get a lot of data from the Realtors Association and our MLS, our Chattanooga MLS. So we go back to 2010 on data here. And as you may remember, I want to put this in perspective too, like you were doing a moment ago. 2010 was a terrible year in real estate, and it was coming off of the Great Recession. We were in the middle of the Great Recession. 2010, 2011, things didn't really start making the turn until maybe 2012.
Yeah.
It's kind of interesting to think of that as almost a bottom. And then, of course, we've been really at a high in recent years, and it has gotten tighter, obviously, in 2023 and 2024. And as you mentioned, you're kind of expecting at least interest rates to remain similar for 2025.
Yeah,
roughly.
you want to talk about that now?
Yeah, let's go ahead and talk about that. I'm sorry.
No, that's good. That's
yeah,
good.
because we're going to talk about inventory here in a moment.
Two perspectives on that. National Mortgage Bankers Association, which pays economists, who knows? I mean, they have their own economists on staff. Who knows what those dudes make? Yeah. Let's say probably a lot.
Yeah.
And they have missed it big time the last 2 years because they predicted we would be at 6.5 or so by the middle of last year, 2024. We didn't hit that mark. This year, they're kind of backing off of their predictions a little bit, but I do subscribe, and thousands of mortgage people across the country subscribe to this same guy, independent guy, mortgage MBS Highway, which, Mary Habib. Yeah. So he's been pretty dead on the last 2 years, as opposed to the National Mortgage Bankers Association. So his prediction for this year, for 2025, is that we would get closer to 6% by the end of the year, maybe 5 7/8 to 6 1/4, somewhere in there. Now, he's not saying, nor is anybody saying, we're going to be at 6.5 by the middle of the year or anything like that, because they predicted that last year and it didn't work. So that's a really good positive. And the reasons that he comes up with that: slightly higher unemployment.
Mm-hmm.
And that's going to cause the Fed, again, we back up and we're talking about the Fed again, to again accelerate their rate decreases, which will help us on the mortgage side, because it tells the market, tells people who are buying mortgage-backed securities, the Fed is still serious about fighting inflation, and that's what determines really our long-term rates.
Right.
So all of that, just boil it all down. Still, demand is still going to be high. I'm getting into that, and that's not really what we asked a question about, just about rates. So the predictions for the market is, again, 15, maybe even 20% increase over last year.
Okay. In sales.
In sales.
In sales. Very good. So we will look at that now, and that's national information?
That's national information.
Yeah, we want to be clear that we're actually going to delve into Chattanooga information here, too. Obviously, interest rates, that sort of thing is not localized so much, right?
Right.
Anyway, let's look, and you've got these data points too, Don, so we can look at it together. But we're going to look now at Chattanooga data, what I want to look at first is the inventory of homes for sale. And when I say inventory of homes for sale, that's how many residential properties are for sale, not land, not commercial, not, it's residential properties for sale in the Chattanooga MLS. Now, this is not city limits. This is not just Hamilton County. It includes Georgia, portions of Georgia. Certainly, the primary counties for the Chattanooga MLS are Hamilton County and Sequatchie County in Tennessee, and then in Georgia, it's Dade, Walker, and Catoosa. Those 5 counties are the primary counties for the Chattanooga MLS. And there are properties listed outside of those counties. It's just by somebody that's a member of the Chattanooga MLS, someone like me that's a realtor here. So there are properties certainly in Cleveland, all the way to Calhoun, Georgia, going south, maybe up towards Monteagle, that direction. There are going to be some properties listed. But anyway, these data points include everything in the Chattanooga MLS that's a residential real estate listing. So inventory of homes currently, actually today, is 2,652. I mean, I looked at that just a few minutes ago. 2,652 properties are for sale in the Chattanooga MLS. At the end of 2024, we had 2,880. So we've already knocked down a few, a couple hundred there, it sounds like, since the end of the year. But what we've got here is data that goes back year over year. At the end of the year, how many homes were for sale? And that's what I want to point out, because if we go back you have to go back to 2017, pre-pandemic. We're really at pre-pandemic levels now of inventory. What does that mean to you? Well, that means if you're looking for a property to buy, if you want to buy a house, it's a great time to do that because it's not as tight of a market as far as number of properties you can look at. Now you have, we're running at about 50 days on market. 50, that's a month and 2 or 3 weeks, right? You've got multiple opportunities to look at different houses, and because there's not as much what I call velocity, but it's just not as much sales velocity. I guess that's a good word, isn't it?
Yeah.
They're not moving as quickly as they had been. And we've all heard about 2020 after the pandemic began and how the back half of 2020 really ramped up. And then 2021, 2022 were just crazy. Just all kinds of activity in the market. But let me tell you that the number of homes that were available was lower. The inventory was much lower. Our lowest inventory was in 2021 when we only had 1,134 at the end of the year. Now, it actually dropped below that in middle of the year. I remember, it getting into the 500 and 600 houses available. It was really, really low, but at least at the end of the year, that's where it ended up. And so this year, we're at the end of the year, it was 2,880, and you have to go back to 2017 to find a similar number, which was 2,754. And 2018 is when you'd have to go back, 2,844. Then in 2019, it dropped down to about 2,300. And then in 2020, it really dropped down at the end of the year to 1,400. So those are kind of the numbers of inventory of homes for sale. We go back really far to the Great Recession, and when nobody wanted to buy a house, they were afraid to buy real estate. 2010, which was the height of the Great Recession, 6,227 homes for sale. That's not coming back anytime soon. I just don't see that happening. I guess a lot of folks will say things like, well, I'm just waiting on, prices to come down and a lot more houses to be available, or rates.
Yeah.
3%. I don't see any of that happening.
So it's interesting, the correlation between the interest rates during that same period of time you're talking about and the number of houses on the market. Because when rates got 3% or thereabouts in 21, 22, everybody's thinking, it's almost cheaper to buy a house than to rent. And if you looked at the rent increases during that same period of time. And so what happened was appreciation. Everybody knew that appreciation, I think it topped out at 15% here. I'm not looking at that number right now, Blake, but it was
here's your
pretty amazing. So 15.2% in 21.
Yep.
So it's why not buy a house? So again, it was kind of not a limit. It was a limited inventory because there was so much demand.
Right.
Houses were on the market just days. Need to get an offer, multiple offers, bid over asking price. We dealt with all of that in 21, 22. Again, a demonstration of the demand that is there. That demand does not subside. Whether somebody wants to buy a house or they think they should buy a house, that is controlled to some degree by interest rates. So now if you come to this period in time and you're talking about rates again, some people think, well, as you said, I want the houses to come down, and I'm waiting for interest rates to come down.
Waiting for it all to come.
Waiting for it all to happen, and that would be really nifty. Don't wait on that. If you looked at the national average median price, which you've got Chattanooga stats here, and last year, I want to say it was 3% or something like that, Blake. But again, here, it's 5%.
Yeah.
Same prediction for 25, same numbers. Even some experts nationwide are saying we might be closer to just 1% appreciation. That is not happening here. So that $300,000 house that you're looking at in January of 2025, 5% appreciation, at the end of this year, is going to be a $315,000 house.
That's right.
Here in Chattanooga.
Yeah,
And we're just looking at past data. We're looking at demand. We're looking at everything. So how much have you lost by waiting on a better interest rate?
Right.
Is my point. So let's say that it did go to 6%. We talked about if it's at 7% now, how many years does it take to catch up?
Mm-hmm. Right.
You're paying $15,000 more for that house. I don't have the number in front of me, but it's a lot of years before you've caught up to that. Does that make sense, the way I'm saying that?
Yeah, and I do want to touch on this because you're talking about appreciation of homes. And let's talk about them. And I use median sales price. People will ask, what's the average? Well, the average gets skewed. It really does by some really high-end stuff, some multi-million-dollar properties. And incidentally, we'll talk about some million-dollar properties here in just a minute too. But multi-million-dollar sales will really skew the averages. So you really look at median sales price, which means that half of the properties sold for less and half of the properties sold for more. And the median sales price for the entire year of $331,000. That's in the Chattanooga MLS, $331,000. Just the year before, $315,000. It's $315,000 in 2023. So just this past year, we saw in what people would say was not a good real estate environment.
Right.
We saw prices go from, it went in 2022, the median was $305,000. In 2023, it was $315,000. 2024, which we just wrapped up, the median sales price was $331,000. And incidentally, it's a little higher at the end of the year than it was at the beginning of the year. That's the average going all the way back to sales in January. But if you look at December as well, I mean, you can see that it's actually even higher. In fact, the median sales price for December of 24 was $337,500. So your point being that houses are not getting cheaper, at least not anytime soon.
Don't wait for the houses to get cheaper.
Don't wait for it to get cheaper. Here are the appreciation rates just kind of over the years. Let's look
again
back.
Specific to Chattanooga.
Yes.
Area.
Absolutely. Chattanooga area. Yeah, this is not national information. That's why we wanted to do this, because it's Chattanooga data. And I'm just going to look at appreciation rates. And this is percentages annualized, right? Let's go back to 2013 because it was just 2% in 2013. We were still just starting to turn the corner from the Great Recession. And in 2014, it kind of got back to we're growing and started to return. So 2014, there was a 5% price increase. In 2015, it was 7%. 2016, it was 5.9%, just below 6%. 2017, this is all pre-pandemic, 8.7% increase. 2018, 6.9%, right at 7% increase. 2019, 8.6% increase. Again, this is all before the pandemic. It's before any of that happened. We were having not double digits, but very strong appreciation rates, absolutely outpacing inflation. No question about that. So then 2020, it was 13.3% increase. 2021, 15.2% increase. 22 was 15.1%. That's when we were getting those crazy increases in value that we all know were double digits, really big. And you think it's all over in 23 because interest rates went up. Well, no, we had 3.4% increase in 23 and then another 5.1 in 24. And I would agree with you, Don, that the numbers, and this is my prediction as well, is that we're going to be looking at about a 5% increase in the median sales price in Chattanooga throughout the year, this year. So if you bought the house at $300,000 today, it's priced at $300,000 today, a year from now, I'm going on record saying it's probably going to be a $315,000 house. That's a 5% increase.
And you've got the data, the data to back that up. Now, if you did that same time period, there's outliers nationwide that there's aberrations. If you did some certain parts of California or something like that.
Austin, Texas.
Yeah. They're outliers. But they're not even predicting necessarily 5%.
Right. Right. That's true.
As we go on. But we've got the data here to show, why do people want to move here? Why is there demand here? So, yes.
There is continued demand. People do want to move here. Good jobs. There are technology opportunities here that we didn't have years ago.
Right.
Obviously, Volkswagen, the car manufacturing industry. We just have a lot going on here in Chattanooga, and people are figuring that out. And they have learned that. You probably know people that have moved here from California, New York, Chicago. Those are very common, even Florida, but definitely those other states and city, Chicago, to come to Tennessee in particular, some to Georgia as well. But Tennessee has the great appeal of the no state income tax. And that's a huge factor that I hear when people are saying, I selected Tennessee because of the tax environment. The other thing that I would expect is that we're going to have probably a few more homes for sale, much like we got back to those pre-pandemic levels this year, with inventory at 2880 right at the end of the year. Probably going to stay in that range throughout the year is my expectation, just because demand is still plenty strong. And as you've mentioned, rates hopefully will ease down a little bit, but not at the beginning of the year.
Right.
And not necessarily in an orderly fashion.
Exactly. It's not a straight line. Not a straight line at all.
Well,
and to your point, too, I mean, we're in touch with various builders, some of the bigger builders here in our area. And if you ask them, they're very optimistic. They're planning on, cumulatively of the ones that we have talked to, hundreds and hundreds of homes, and builders are not stupid. They're not going to build those homes if there's nobody there to buy them.
That's right. They see the demand.
Yes.
They see it as well. And they know, and it costs a lot of money to build a house now.
Yes.
So they're not going to do that just on a whim. You're exactly right. Some of the other just data points I wanted to point out, we were talking about $1 million homes in Chattanooga. We were talking about inventory. I was not a realtor whenever the first house sold for $1 million, but you were probably a mortgage broker in those days or a banker at that time. Do you remember when that was?
What the date was?
Oh, no. Yeah, or the year or anything like that?
No.
Okay.
But that was, if you went back to when I started doing mortgages 38 years ago, yes, I was 20.
You were a young man, for sure.
And you looked at those real estate books, there just weren't $1 million houses. It would be the aberration if there was $1 million house.
If there was one, yeah, that's true.
And
I'm
now,
sure there were.
It's just no big deal. And I have clients calling, and these are younger people. It's like, yeah, we're looking in the $1 million range. I mean, good for you. Go for it. That's just, yes.
Well, that's what I wanted to touch on is today's data in the Chattanooga MLS. Out of 2,652 homes, residential properties that are for sale, 151 of those properties are listed for $1 million or more. So that's about 6% of the listings. 6%. 6 out of 100 properties that are for sale are listed for more than or for $1 million or more. That's pretty remarkable. But I also want to look at the other end of the scale, because we know that's dried up a little bit, the less costly homes. So listings under $200,000 currently, there are 194 listings.
Okay.
And that comes out to about 7.3%. So you've got the $1 million at 6% of our listings, and about 7.3% of our listings are 200,000 or less. If we go to 250 or less, you're at 17%, 17.5%. Then we go to $300,000 or less, there are 827 listings. That's 31% of all listings are priced at $300,000 or less. Not quite a third. But here's the point that I really found was, encouraging if you're trying to buy a house, is that over half of the properties for sale in the Chattanooga MLS are less than $400,000. So there's some encouragement.
That's a good stat to know. I didn't know that.
Yeah,
stat.
over half. So it was like I don't have the percentage, but it was like 52% or something like that.
And I'm going to get on my soapbox just a
Please
second.
do.
Because I've said it before that we in the mortgage business have not done a good job of letting those type buyers know you don't have to have 20% to put down. There's such a huge misconception of people that, I've got to have 20,000 down. I have to have 40,000 down or whatever. No. Especially in that price range you're talking about. Tennessee Housing, all over the state of Tennessee, their cap is 400, right at the stat that you were giving us. Rural development, which goes just in the quote unquote what they define as rural area, but the upper half of Hamilton County and the far eastern part of Hamilton County qualify. Virtually all of Bradley County qualifies. Anyway, zero down programs. Mm-hmm. So you can get into the house with close to zero, if not zero, cash out of pocket to do that. So certainly veterans loans have been out there forever. Most veterans know that they have that 100% loan that's available to them. So don't let the fear or apprehension about a down payment stop you from thinking about buying a house if you're, thinking of that price range. So
that's great information, and I always encourage people. I say, if you're concerned, not just if you're concerned, but if you want to buy a house, it's probably more within reach than you realize.
Yeah,
even with all the media talking about, and we've even been talking about prices are up, rates are not fabulous,
and I'll get a little personal and tell of my son's story. 7 years ago, I guess it was 8 years ago, I can't remember, 7 to 8 years ago, he was getting married, and they bought a little 900 square foot house in North Chattanooga. It's $179,000. I can't even remember the interest rate. He came to me, believe it or not, for the mortgage. I can't believe he did that. I don't know what he was thinking about that. So then 3 years ago, it's like, okay, now they've had a child on the way, got a big dog. The math doesn't work for 900 square feet. They need a bigger house. They found one off Highway 58. But their house had appreciated over $100,000. Now, that was unusual. They bought right. They were able to sell it right. So they took almost all that equity to put into the new house off Highway 58. There was a $300-something thousand house. And I apologized that we got 4 5/8%, which now ain't looking too bad. But it just reinforces the stat that homeowners' average net worth is 40 times that of a renter. It's real estate. It's real estate. It's real estate that does that.
But you said that a homeowner?
Yes.
40
Average
times?
40 times net worth. And think about
net worth.
With the stats we were just talking about. That $300,000 house is worth now $315 next year, or $330 the following year. You're building that wealth. You got to live somewhere.
Yeah.
And you're paying down the mortgage, so you're double creating equity every month.
Yeah.
Every month that you make a mortgage payment.
It's an amazing thing. And, in both directions, the appreciation plus the pay down of mortgage, both of those are compounding effects. Right? They're both compounding effects. And I think it was Albert Einstein that said, those who understand compound interest will benefit from it. Yeah. And those who do not understand it will pay it. And that is so true. And in real estate, it is illustrated every single day. It's something we've got to, and I encourage you, if you don't understand what we just talked about, please call me or call Don, and we'll pick up the phone, or if we don't pick it up, we'll return your call. And we want to talk to you about it, because we both want to see people succeed, and we want to see you succeed, and we want to see you grow in your wealth, and you can do that through real estate.
The average equity. So this is not specific to Chattanooga.
Okay.
It may be a little inflated as opposed to Chattanooga. Average equity, you, me, whomever, walking around that has a mortgage, that has a house here, $311,000.
Interesting.
Again, reinforces that 40 times net worth, $311,000. That is a nationwide average.
Yeah.
So if everything else follows true, that maybe here it's 280 or something like that, but it's still, let's say, close to 300,000 for our area.
Wow. That's quite a difference.
Yes.
And 40 times.
If you're
renting. So let's figure out a way to move you from renting to owning. I mean, that's just what we got to do. And there are multiple ways to do it. And as you mentioned, it doesn't always have to require a lot of cash up front. Right. Don, I do want to cover, because I pulled this data, it's interesting.
So we need to use it.
We need to use it. I pulled by zip code, the December data from the Chattanooga MLS by zip code, so that we could kind of look at neighborhoods, because what we might think is a hot neighborhood, or, I mean, certainly cool places to live or whatever, it may or may not fit with where the actual sales are. So by zip code, I have stacked these by zip code, and they are in order of how many sales. I think that's the right thing. Yeah, total number of sales. No, it's active listings. I'm sorry. Total number of active listings in a zip code. So the first zip code I've got here is 37409, St. Elmo.
Right.
You know, who wouldn't want to have a place in St. Elmo just for fun, if nothing else, right? Just a cool place to be. Well, it's the least number of active listings at 17. It's not the absolute least. Actually, I didn't even go to some of these. Riverview, Rivermont, Lupton City. I think there were maybe 2 or 3 in December. It was very low. And there were some other areas similar to that I didn't even include them. So I just went to the places that we would think there's a lot of activity. So St. Elmo, not at necessarily at the highest, but let me give you that data. There were 17 listings, and I do have the average list price here. Well, median list price, $554,000. I'm not going to go through all of these for all that information, but there's only 2 Georgia zip codes that I used because they were the ones that had the most activity. Fort Oglethorpe at 30742. That's the Fort Oglethorpe. Had 28 listings at the end of the month of December. Southside, Chattanooga Southside, 37408. So that kind of covers the south side. I mean, I know there's zip codes don't follow restaurants, or a street precisely. There were 41 listings on the south side. Let's go to Highway 58. You were talking about that. That's zip code 37416. And our number of listings was 51 in that area. And then Signal Mountain is next, 37377. And that had 51 listings.
What's the average price on Signal?
Average price, great question. Let's take a
median
look.
Or whatever you've got.
Yeah, whatever we come up with. Median list price is $667,000. The median sales price was $602,000. So you're looking at over $500,000 for the median sales price on Signal Mountain. Red Bank, not far from Signal Mountain, just down the hill, right? 52 listings, and your median sales price was $288,000, and list price $353,000. So that's Red Bank for December. Lookout Valley,
right?
Zip code 37419. I'm being clear about the zip codes so that you know if you're in that zip code. It might not be precisely Lookout Valley, but 54 listings in December. Appleton, 37302 at 58. Then we go to Brainerd, 37411 at 60 listings. East Ridge, 37412 had 66 listings. And what do you think's next, Don? Do you have a guess?
Hickson? No.
Hickson, you're getting there. Hickson's got a lot of activity. Saudi Daisy.
Okay.
37379. 76 listings. And then Ridgedale, Highland Park, Orchard Knob, Glenwood, that area, which is really hot, 37404 is the zip. And there were 82 properties for sale. Now we get to Hickson, 37343, Middle Valley, Hickson, that whole area. And there were 100 properties for sale in that area. We go back to Georgia. There's more properties for sale in Ringgold than there were in Hickson.
Okay.
So 30736 in Georgia, 139 properties for sale. Then we moved back across the border, adjacent to Ringgold, East Brainerd, 37421. And in 37421, there were 141 properties for sale. The top zip code. Now, it's a large zip code, and I think a lot of people have moved into this zip code. Well, they have in more recent years. So I think when it first was a zip code, it was really big, but it's Ottawa, 37363. And Ottawa had 238 properties for sale at the end of December.
So 10%.
About 10%. So 1 out of every 10 properties
Is
for sale
in Ottawa.
In this area is in Ottawa. Wow. If you're wondering if your neighborhood or your zip code is a hot zip code, well, there you go. And we didn't look at all the prices. We can. I've got all that data. Glad to share any of that with you. You certainly can email me, text me, send me a personal message on one of these platforms that we're on, or reach out to Don as well. Let's recap some of the things. Inventory of homes, which was sitting right at about 2,800 at the end of the year.
So a gradual increasing trend.
Gradual increasing trend of available inventory. And what that means to our viewers is that we're having more houses available for you to look at. And that also means that it slows the pace of the sale down a little bit, in that you might actually get to look at 5 or 6 houses and decide which one you want to make an offer on, instead of, boy, we better offer on this one yesterday because it's already gone. They're still going to have a lot of that. If it's a nice property, if it's a really nice property in an area that's really nice as well, or one of these hotter areas, it's still going to sell in a day or two. It really is. So you're still going to have some of that, but it has slowed down a little bit there. So inventory, we expect it to gradually increase. We definitely expect sales prices to continue to increase. The data points to that, and we saw 5.1% increase in 2024, which many would have said was a slow year, and we expect about 5% increase in sales prices this year, 2025. Right now, that median sale price of a house in the Chattanooga area is $331,000, and that's the sold that it closed at that, and we would expect that to be at, I'm trying to do the math real quick on that. It would be less than 350 actually. But anyway, about 350 for the end of the year, for next year. Is it right? Okay.
Sure, 350. Let's say that.
We're going to go with 350.
350.
Approximately. It should actually be slightly less than that. But okay, and then interest rates.
They're good. Who knows? But, if the experts, the true experts are correct, we might be approaching to 6% by the end of this year. So no time frame specifically on that.
Well, very good.
Yeah.
Very good. Don, let's wrap this up and tell people how they can get in touch with you if they'd like to.
At Highlands Mortgage, phone number, if they want to use a phone, 624-0448. And let me give one anecdotal story too, Blake. Maybe emphasizes a couple of things that we've been talking about here. Set a record in December for a closing that we did, that I was the loan officer for. This file was in process for 4 years. So what?
4 years.
They started looking actively 4 years ago.
Okay.
2020. They started looking for a house. But again, as everything we've talked about, rates were really good, demand was really high, inventory was really low. They'd find a house, they'd make an offer, outbid. They'd find a house, couldn't get it. They'd find a house, or the inspection was bad. Somebody was asking too much for a house. They really needed a lot of work. They went through this over and over. And sometimes they'd back off for a few months. I wouldn't hear from them.
Yeah.
They get a little discouraged, right? A little discouraged. But they found the perfect one at the end of last year. So we closed out on that. So I set a record, 4 years. I don't know how many pre-qualification letters, but we didn't mind doing that. I knew eventually they would find the right house for them. And they loved this house that they found. So it can happen. It will happen. Maybe better sooner than later. And don't take 4 years, but it can eventually happen.
It can happen. It definitely can. Yeah. We can all work together to get you in your dream home.
Yes, that's the point.
That's the point of it. So they can reach you at the office, Highlands Residential Mortgage. And I had to reach into my wallet to get one of my business cards.
You forgot your phone number?
I know my phone number, but I have an office number that I'm required to give with Epic Realty. And so I want to give that real quick. It's 888-893-3537. But you can reach me also on my mobile phone, which is 423-315-1815. I'm on LinkedIn as Blake Watson. I'm on Facebook as Blake Watson. I'm on Instagram as Rock and Roll Blake. So you can find me in all those places. Please do reach out to me or to Don if you have any questions. Thank you so much for sharing this time with us. It's really cool that we got to do this together. Thank you, Don, for coming and being on the show.
Thanks for having me.